Good morning. Welcome back to the War Room. I am Malik. Today is Tuesday, March 31st. Yesterday morning, we laid out the mathematical probabilities for the week. We told you there was a 70% chance of a cascading liquidation if the 150,000 trapdoor broke. We warned you that if the index cracked below that line, technical support would entirely vanish, and a self-feeding downward spiral of broker margin calls would trigger. Yesterday, that nightmare scenario became our reality. The 150,000 floor did not just crack, it completely snapped. The KSE 100 index went into absolute freefall, bleeding out a catastrophic 4,864 points to close the day at 146,842. This was an institutional massacre. Over 529 million shares were forcefully dumped onto the main board. If you ignored the war room and held cyclical heavyweights through the weekend hoping for a bounce, your portfolio was decimated. Today, we are dissecting the exact anatomy of a forced liquidation, and I will show you why the corporate calendar for Tuesday is aiming a loaded gun directly at the kill zone. Let us analyze the pure tape mechanics of yesterday's 4,864-point slaughter. When a market drops this violently on 529 million shares, fundamental valuations temporarily cease to matter. You are no longer trading the intrinsic value of the companies, you are trading the over-leveraged accounts holding them. As the index crossed below 150,000, automated risk management systems at every major brokerage in the country triggered simultaneous margin calls. Retail traders who had borrowed money on margin to buy the Wednesday fakeout were given hours to deposit cash. When they couldn't, their brokers hit the sell at market button for them. This creates the cascading effect. Broker A force liquidates a portfolio, which drives the price down further. That new lower price triggers broker B's margin calls, driving the price down even further. The smart money just stood back, pulled their bids, and let retail accounts burn each other to the ground. The macroeconomic reality, the $112 global oil shock and the 55 rupee local fuel hike was the catalyst, but leverage was the executioner. The market is now trading at 146,842. We are in uncharted territory. The boardrooms are bleeding and they are forced to react. Today, Tuesday, March 31st, the PSX calendar is specifically targeting the hardest hit sectors of the macroeconomic kill zone. Mark your screens for these exact times. 10:30 a.m., Gul Ahmed Textile Mills Limited, holding a mystery non-financial meeting in Karachi. The textile sector's export margins are actively suffocating due to exploding energy tariffs and locked global supply chains. A restructuring meeting from a textile titan this early in the session signals a massive operational pivot. 11:30 a.m., Pioneer Cement Limited, holding a mystery non-financial meeting in Lahore. Cement is the heaviest of the cyclical heavyweights. With $112 global oil shock destroying transport economics, Pioneer Cement's forward guidance will act as a gravity well for the entire construction and manufacturing board. 2 p.m., Haskell Petroleum Limited, dropping annual accounts right as the afternoon session heats up. As the national energy grid suffocates under expanding circular debt, watching the balance sheet of a major oil marketing company will show us exactly how toxic the liquidity crisis has become. Here is your battle plan for Tuesday. 1. Do not catch falling knives. The market is at 146,842. There is no established technical floor here. Do not buy heavyweights simply because they look cheap compared to last week. In a forced liquidation cycle, cheap assets can easily be cut in half again. 2. Respect the kill zone gravity. Watch the tape carefully around 10:30 a.m. and 11:30 a.m. The Gul Ahmed and Pioneer Cement meetings will dictate the survival momentum for the entire manufacturing economy. 3. Total cash supremacy. We predicted the 150K snap. We watched the 4,800-point bloodbath from the absolute safety of cash. Do not get impatient now. Keep your armor on. Let the margin calls finish washing out the weak hands. Protect your capital. Command the Tuesday. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.